Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's look at some individual stocks on the move today here in Europe. I'm Caroline Hepker and I'm joined by Bloomberg reporter Chloe Millay. As usual, good morning, Chloe.
Good morning.
Let's begin with Burberry, putting in a really strong showing today. Is there growth here to stay? Is that a question for business, or is it about whether you're a fashionista, maybe? I don't know.
Yeah, I don't know. I don't own any Burberry, but it seems that they are doing pretty well. So they returned to a retail sales growth for the first time in 2 years, and that was thanks to really strong demand, in particular in the region that includes China, which is something that echoes what other luxury names have been saying this season. So we remember LVMH last month mentioning that rebound in that Chinese market as well. For Burberry, this also confirms that the turnaround under the new CEO is working. So he's refocused on the Burberry classics of trench coats and scarves, leaving behind a previous push into handbags that really failed. And that seems to be paying off, kind of going back to its roots. And he's also made some big cost cuts. So earlier this year, the company announced plans to get rid of about a fifth of its workforce. So all of that, this kind of refocus on the British roots of Burberry, and then also those cost cuts seem to be working quite well and paying off. And analysts have said that all the boxes were ticked, that the execution was on track. The strategic plan is looking quite robust, and the potential rewards all still outweigh the risks for Burberry. So overall, a pretty good print from Burberry this morning. We saw that reflected in the shares rising, although they pared some of those gains now, I think.
Yeah, absolutely. Up as much as 5% this morning for Burberry. Meanwhile, the pharmaceutical company Merck is driving some conversations. Why?
The German science conglomerate reported better than expected a profit this morning. So that was thanks to strong sales of its new tumor drugs, but then also really strong performance in some parts of its life science unit, which is the biggest division for Merck. So the parts that did particularly well are the ones that provide the equipment to manufacture drugs. And that is a part of that business that had seen a little bit of a slowdown post-pandemic because of destocking, but now it's re-accelerating again. And the company is trying to revive growth across all of its divisions. So that includes healthcare, life sciences, and electronics as well, and doing that through acquisitions and through a lot of cost control as well. So, for example, in terms of acquisitions, it recently bought the rare disease specialist SpringWorks, and that helped contribute to sales for this quarter. So that was a boost there. For the electronics division, they said that the demand that was related to AI-related semiconductor materials was still quite strong, but that there was a delay in some big projects, and that was continuing to hurt growth, which echoes what we've seen from other companies within that semiconductor sector more broadly, and providers of equipment to that semiconductor sector.
So that on Merck. Meanwhile, we are seeing a drop for Siemens. What are the main challenges that they've been talking about?
Yeah, so a lot to digest from Siemens this morning. So It actually set some near and medium-term targets. It also announced a kind of a broader revamp that includes trimming its stake in Siemens Health and Ears, which is the medical equipment unit that was spun off in 2018. And the goal of that is to free up capital and invest more in AI and software. And so analysts have said that deconsolidation makes a lot of sense, that it's a logical step to simplify the group, given that there's very little synergy between Health and Ears, which makes MRI scanners, and then Siemens, which makes software for factories. So those are two very different things. So simplifying it makes sense, but overall the results and the outlook disappointed a little bit. And we had JP Morgan analysts calling the results quite mixed, saying that there's pressure on margin, there's currency headwinds really hurting the business as well, and that the medium-term guidance is actually quite opaque. That drag from the currency headwinds is really the focus here. It seems the company said that it expects those currency fluctuations to strongly burden profit and sales growth in 2026. So that clouds the outlook a little, and we saw that reflected in shares a little bit weaker this morning as a result.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.